Hello and welcome to MG Accounting. In this video, we'll show you how to run a limited company. If you have just opened a limited company, you may ask, how do I use the company bank account? How do I take money from the business? What taxes will I pay? How do I pay myself from the company? In this video, I will explain everything in a very simple way. So first, how money flows in the company. So your clients pay money into your bank account, into the business account. From that account, you pay business costs. For example, tools, materials. At the end of the year, we calculate money in minus business costs. What is left is called profit. You pay corporation tax on the profit. This is 19% if the profits are up to £50,000. Now, what is a business expense? What do I pay out of the company? Use this simple rule. Ask yourself, would I still pay this if I didn't have the business, but worked as an employee, for example? So let's say you work you don't have a limited company, but you work at Tesco. So would you pay an accountant then? No. So that's a business cost. Would you pay for tools then? No, that's another business cost. But would you pay for food or would you pay for restaurant? Yes. So these are not business costs, these are personal costs. This helps you decide what you pay from the business bank account and what from the personal. So only 100% business costs must be paid directly from the business account. For example, tools, materials, equipment, workers or subcontractors, van costs, accountant, advertising, etc. But personal expenses, how do you pay them? You transfer funds from your business account into your personal account, and then from the personal account, you pay your personal expenses like food, holiday, etc. So you also pay from your personal account what we call mixed costs. What are they? So this is telephone, home rent or mortgage, home bills, your personal car. These costs are partly personal, mostly, but they also have a business element, also partly business. So you would still have these costs even if you didn't have the business, but they now are higher, they have a business element. So because of that, at the end of the year, we will claim part of them as a business expense. So for example, your personal car, pay all car costs, it's a mixed expense, from your personal account. At the end of the period, we will treat part of the money that you took from the business, from the company, as business travel. This is called mileage. This is an expense for the company. So mileage is calculated as follows: 45p for every mile for up to 10,000 miles and 25p per mile thereafter. We will do the sum at the end of the tax year, and we'll do the same for your phone and home costs. So how do you take money out of the company? That's the next question. The company is separate from you. So the money in the company bank account belongs to the company. Then you pay yourself from the company to your personal account in two ways. First, as a salary, and second, dividends. So first, salary. Salary is usually paid every month. It has two benefits. First, it is a company expense, so the company pays less tax. Second, the salary gives you pension rights, national insurance record, access to maternity, different benefits. How much salary to pay? In the UK, you can earn up to £12,570 per year tax-free. This is called personal tax allowance. This includes all your income, salary from your company, salary from another employment if you have such, self-employment income, rental income. All income is pulled together and it uses up this tax-free allowance of £12,570. So, to set up a salary, you must not have other income apart from the company, or it must be very low. It is important to set up a salary so that you don't lose your tax-free allowance of over £12,000. So this salary is usually £1,047 per month and is paid on the 5th of the following month. For example, the salary for April is paid on the 5th of May. The best way is to set up a standing order from your business account to your personal account for £1,047 on the 5th of each month. If you do not have enough funds to pay the salary, that is fine. You can pay it later, 2-3 salaries together, that's not a problem. The important thing is for us to report it to HMRC each month so that it can go as pension credit on your national insurance record and to allocate it as an expense in the company. If you want us to set up salary or discuss the amount to pay, you must send us an email, unless we already discussed this topic with you. So the second way to extract money from the company is dividends. That's how you pay yourself salary, number one, and now we're talking about dividends. Dividends come from company profit after corporation tax has been charged. So they are not an expense to the company. You can take dividends anytime you wish, in irregular amounts or at irregular times as you wish. You, as an individual, will pay dividend tax on them, which for this tax year, 2026-27, is 10.75%. So here you can be flexible. Take dividends if you need money, but keep the rest of the profits in the company. That will save you some personal tax. So in summary, directors usually take combination of first salary, usually £1,047 per month, and second dividends, irregular amounts, irregular intervals. So one piece of important advice. Try to keep your total personal income overall under £50,270 per tax year. This is called the basic rate band. If your income goes over this, you will pay a higher rate of income tax. So you can see our rates and allowances table that you can find them on our probably website or attached to this email. Your personal income includes salary, dividends, rental income, or any other personal income. You can take up to another probably £5,000 on top of that to reimburse yourself for mileage, the business use of home that we discussed, so that in total, try not to withdraw from the company more than £55,000 per tax year to save more tax. So keep within that limbo. So if you have extra profits in the business, there's ways how to use these accumulated profits to invest without taking them and thus saving tax. If you want to invest the profits that are piling up in your company, contact us for more information and I can give you a separate consultation. So another important topic is VAT. So if your turnover is over £90,000 for any 12 consecutive months, you must register for VAT. But after registration, you must charge VAT to your clients and you must send VAT returns to HMRC. So if you're close to this level, £90,000, call us immediately, as we will not know about this until we prepare your accounts at the year end. The next point is for people who are running construction businesses. So if that's you, CIS, Construction Industry Scheme rules may apply. What does it mean? If you work for contractors above you, they may deduct 20% CS tax. If this happens, you must get CIS statements, PDS statements or pay slips. This shows how much income you have been paid and how much CS tax have been taken. You should get every month these statements. Sometimes you receive them once in the year. At the year end, we will claim the tax back. So always collect all your CS statements. Very, very important. So that we can claim your tax. You can also register your company for gross payments. This means that your contractors will not deduct any CS tax because gross registration, no CS tax deduction. The main condition for this is your turnover for the past 12 months to be at least £30,000 per director, multiplied by the numbers of directors in your company. If it's one director, £30,000. So contact us if you want us to apply for gross registration, as long as your turnover meets this criteria. So what are our responsibilities? We will submit your company's salaries to HMRC each month. If you pay subcontractors in the construction industry, we will submit also that information to HMRC each month. On the anniversary of the company, on its birthday, A special confirmation statement is sent to company's house. We'll take care of that. There will be a charge by company's house of £34 for that. At the end of the company period, company accounts are sent to company's house, and a corporation tax return is sent to HMRC. Also, each director needs to submit a personal tax return showing all salaries, dividends, and all personal income altogether in that return. You do not need to worry. We will take care of all the duties of the company. So running a company has many details, but here are the basics for you to remember. I'm going to summarize. That's all you have to do. The rest leave to us. So remember, all business income must be paid into a business company bank account. Only business expenses must come out and be paid out of the business bank account. All personal and mixed expenses are paid from your personal bank account, and then you transfer from the company to your personal account salary and dividends, depending on our consultation. Try to keep those total transfers from the company to the personal account within £55,000 per tax year. And then two more things. Call MG immediately when your turnover goes high, close to £90,000 for 12 consecutive months. And then call MG immediately if you start paying subcontractors in the construction industry. That's all. That is all you have to do. Leave the rest to us. Our motto is, you work, we paperwork. We take care of your administrative needs. We monitor all deadlines, and we will contact you when something needs to be submitted to HMRC or company's house. So you don't need to worry, we'll contact you. So if this video helped you, like and subscribe. If you have questions, write in the comments. Thank you very much.